Between 2009 and 2026, regular people investing just $500 a month in index funds turned that into over $260,000. They weren't rich. They didn't have insider knowledge. They just stayed invested. And right now, that exact same pattern is setting up again. But here's what nobody's talking about. The opportunity this time is bigger, way bigger. $124 trillion bigger. And most people are going to miss it just like they missed 2009. Stay with me, because by the end of this video, you're going to know exactly how to position yourself so you don't make that mistake. Let's go back to 2009. The economy was destroyed. The stock market had crashed. Banks were failing. People were losing their homes. The headlines were terrifying. Everyone was scared. And here's what happened. Regular people pulled their money out of the market. They went to cash. They waited for things to get better. But a small group did something different. They stayed invested. They kept putting money into their 401ks every paycheck. They ignored the fear, they ignored the headlines, and they got rich. Here are the real numbers. If you invested $500 a month starting in March 2009 and just kept going through 2026, you'd have $260,000 today. You put in $102,000. It's now worth $260,000. That's a $158,000 gain. Started in 2010, after the panic was over, you'd have $215,000. Started in 2012, when things looked safer, you'd have $157,000. The point is clear. You didn't need perfect timing. You just needed to participate consistently. That's how regular people became millionaires. Now here's what's happening right now. The great wealth transfer. $124 trillion moving from baby boomers to younger generations over the next 20 to 25 years. And most people think this is just about inheritances. Wrong. This is way bigger. Baby boomers control $124 trillion right now. Real estate, stocks, bonds, businesses, everything. And this wealth is about to move. They're retiring, selling their big houses, moving money around, spending their savings. This creates massive capital movement through the entire economy. When massive capital moves, it creates opportunities. Just like 2009 created a wealth-building window, the great wealth transfer is creating a similar opportunity. Boomers sell houses, millennials buy them. Boomers shift from stocks to bonds. Younger investors buy those stocks. This is a 20 to 25-year wave of money movement. The people who position themselves now and stay consistent are going to build generational wealth, just like 2009 to 2026. Quick question. Are you already investing consistently, or are you still waiting for the perfect time to start? Drop a comment right now and let me know. I want to see where everyone's at. Now let me show you what positioning yourself actually means. People think it means timing the market perfectly or finding the next big stock. No, it means setting yourself up for consistent participation. Here's what worked after 2009. 3 simple things. Max out your 401k or contribute what you can afford. Invest in low-cost index funds like the S&P 500. Stay consistent no matter what happens. That's it. No complicated strategies, no market timing, no stock picking, just consistent participation for 15 to 17 years. And regular people became millionaires. Same strategy works now. Max your retirement accounts, buy index funds, stay consistent for 20 to 25 years. You participate in the entire wealth transfer by staying invested. Real numbers. You're 30 years old. You invest $500 a month for 25 years. At 8% average returns, you'd have $571,000. You put in $150,000. It grew to $571,000. That's a $421,000 gain from being consistent. Increase it over time as you earn more. Start at $500, bump to $750 after 5 years, $1,000 after 10 years. Keep increasing. Same time frame. You'd have over $1.1 million. This is how regular people build wealth, consistent participation during a long-term window. Now you're probably thinking, what if the market crashes? Here's the truth. It will crash multiple times over 25 years. There will be recessions, scary headlines, moments you want to sell everything. This already happened from 2009 to 2026. European debt crisis, market corrections, COVID crash, inflation spike. Every time people panicked, every time headlines said it's the end, every time people who stayed invested won. Same thing will happen again. But crashes are part of the process. They're not the exception. And when markets crash, your $500 buys more shares. You're automatically buying low. The people who got rich after 2009 weren't fearless. They were scared too, but they stayed invested through the scary times. That's how you captured the recovery. Here's what to prioritize. Automation. Set up automatic 401k contributions, automatic index fund investments. Make one decision, then it happens automatically for 25 years. Low-cost index funds, S&P 500, total stock market, lowest fees, broadest diversification. You're not trying to beat the market, you're matching it consistently. Increasing contributions over time. Every raise, increase your investment percentage. Every debt paid off, redirect that money to investments. The compounding is massive. And here's what to ignore. Fear headlines, market crash predictions. These have been wrong for 17 years. People who listened missed the entire 2009 to 2026 run. Ignore them. Market timing advice. Nobody knows when crashes happen. People who try to time it miss more gains than they avoid losses. Get-rich-quick schemes. Crypto, meme stocks, day trading. The people who got rich from 2009 to 2026 didn't do any of that. Index funds and consistency. That's it. Complex strategies? Keep it simple. Index funds, consistent contributions, long time frame. Simple wins. And look, if you're realizing this is exactly what you need to do and you want more breakdowns like this, hit that subscribe button right now. I'm showing you how to build wealth over the next 20 to 25 years with strategies that actually work, not hype, real wealth building. Subscribe so you don't miss it. Now the timeline, this is crucial. This is not a one-year play. This is 20 to 25 years, just like 2009 to 2026 was 17 years. If you're 25 to 35, you're perfectly positioned. You've got 25 to 35 years to retirement. You can participate in the entire wealth transfer. If you're 40 to 50, you've got 15 to 25 years. Still time to build significant wealth. Just contribute more. If you're 50 plus, you've got 10 to 20 years. Be more aggressive, but you can still participate. It's not too late. The great wealth transfer is just starting. You don't need to have started in 2009. Start now, stay consistent for 2 decades. Here's the bottom line. The pattern that made millionaires from 2009 to 2026 is happening again. Different mechanics, not a crash recovery, a generational wealth transfer, but same principle. Massive capital movement over time creates opportunities for consistent participants. You don't need to be rich. You don't need insider information. You don't need perfect timing. You need consistent contributions, index fund investing, and long-term commitment. That's it. The people who became millionaires weren't special. Regular jobs, regular contributions. They just didn't quit. Stayed invested through crashes, corrections, scary headlines, and they won. You can do the same. The window is opening. Position yourself now. Max your 401k, invest in index funds, stay consistent for 25 years. Ignore the noise. Focus on participation. In 2051, people will look back and say the people who invested from 2026 to 2051 got rich, just like we look at 2009 to 2026 now. You can be one of those people. Start and don't quit. If this showed you the pattern and how to position yourself, smash that like button. And seriously, drop a comment. Tell me what you're investing in right now. Your 401k, index funds, or are you still on the sidelines? Let's see where everyone's at. I read every comment. And if you want to keep learning how to build real wealth without the hype, subscribe right now. I'm breaking down strategies every week that actually work for regular people, not get-rich-quick garbage, real wealth building. I'll see you in the next one. Now go set up those automatic contributions and don't miss this opportunity like people missed 2009.